All righty, traders, welcome. It is Thursday, December 14th, 2023. Let's get into trades and the market for today. Let's jump into SPY here. We had an update overall today. So an update on SPY, if we take a look at it. However, we did gap up, finished off of our highs on the session, but overall it was an up day, gapping up a bit more. We are now well over the 3 ATR line when we start to look at the daily here, which to me is not only overbought there, but you're also overbought significantly on the RSI here. MACD is climbing. We are almost overbought on the weekly. We're getting right to that overbought level there as well. So to me, gapping up, moving up today, this little gap above the 3 ATR. I'm not saying we can't go higher. There's a lot of money sitting on the sidelines, and it could certainly be pouring into this account or into this market here. However, this market is not as healthy as it might seem, considering what's happening with the Magnificent Seven stocks. So while the market is up, it's not being driven by those big names right now. And overall, we are definitely overbought. It doesn't mean we can't stay overbought. I mean, when you look at the RSI here, going all the way back to November 14th, with the exception of, I don't know, what, 1, 2, 3, maybe 3 days, maybe 4 days in a month that we weren't overbought. So we've been overbought for a month, and it's picking up steam to the upside. It's all good. I mean, if you are long, you are loving this, you're having a blast. If you are a smart trader, if you're riding the wave, it's great. We're doing well. We had another nice update today. We closed out more winners today. So, I mean, we're doing fine. However, you got to be a little nervous about what's going on in this market place. So we're just near the all-time highs. I mean, we are just within a whisker of 478 or so here. We are 6 points away on SPY. So not even 2%. We are 1.5% or so away from new all-time highs. This is definitely not any kind of a bear market rally. This is a full-on, the bull market is in swing. We're sideways for the most part, but I think if we fail here and don't break this 480 mark, I think we got some problems. We could break it and then we tip over. Either way, I think at some point we're definitely going lower, but is that going to be for 2 to 3 weeks? I don't know. Taking a look at the Qs, they were off on the session today. Again, because the large cap tech names not performing as well as the rest of the market. Now, that being said, we take a look at IWM, and that has now gapped up all the way above, technically, our channel here. So we've broken it slightly once. We've hit it a couple times. I mean, we've technically hit this here. When we take a look at this, we've hit it 1, 2, 3. This is the 4th time we've hit it. And look at the size of this week's candle. I mean, this is one of the largest candles for a week that I've ever seen on IWM, at least for a couple of years now. We've had some big weeks, but this is it. Back in here, back in July of last year, we had 4 massive gap up weeks until we hit that level, and that's where we failed at roughly the 200 each time. Are we going to do that again? I don't know, but there's definitely some movement into small cap stocks, and they are definitely on fire right now. However, like everything else, look how we are well above the 3 ATR. We are way above the top of the RSI and overbought, but rising. So there's no divergence here. It's just strong, powering strong on it. If we take a look at the number of S&P companies over their 50-day moving average, that moved up fractionally on the day. It was up more. Okay, we got all the way up to that 90 mark. Now, I've been talking about that mark now for a week or more. Okay, every time when we look at the weekly here, every single time we've hit that, it's reversed lower. Okay, will that happen again? I have no idea. Was today the magic day? I don't know. We could go up tomorrow. Okay, we could go up for 3 more weeks for all I know. All I do know is I'm playing probabilities and using strategies that take advantage of those probabilities. I'm pretty happy here thinking we could be tipping over a bit. If we go higher, it's fine. We have no risk to the upside on 112 trades, but I'm putting on more trades that are trap heavy, and my overall delta is still negative out there. I'm going to continue to add more bearish type of trades here that are in the form of 112 so that I do not have risk to the upside. I'm not putting on necessarily hedges, okay, which is, just lighting money on fire. Okay. Yeah, you want to, unless you think there's a black swan event, then it's totally fine. Okay. What I'm doing is I'm playing smart trades that are paying me to make a large profit if we pull back from these levels. The more we go up, the more of these I will continue to put on. All right, taking a look at the put call ratio, just continues to fall. Let's jump into kind of the standard chart on that. And again, we're still in an overall downtrend. As long as we are in this downtrend, the markets are going higher. Okay? The market will continue to go higher as long as the put call ratio continues to fall. We thought we were getting a bump, but we never really got oversold on that put call ratio. So we're still in this downtrend. It's on the 10-day moving average. Okay, and that's mirroring the exact climb that we've had in the market. And we can still keep going further down, which means we can go higher. So anyway, I just want to point that out, that there's where we're on the put call ratio. The VIX is just toast. It's down here at 12. It actually popped up on the day. Why? Well, probably because people are getting a little nervous at these heights. But we'll see what happens on the VIX. DXY, the US dollar, tanked a second day in a row. So 2 big down days, US dollar falling hard. That's also not great for a lot of different trades. But if you're looking at the MACDs falling, the RSIs falling, you're in a squeeze. That squeeze may be triggering to the downside. I think the US dollar may have more to fall here, or at least some sideways action, which is going to certainly put some pressure on some things. Taking a look at bonds, the 10-year dropped under 4% yesterday on the day, or at least gapped down below it on today, I should say. So we gapped down today and then fell. We finished off the lows, but in the 10-year note down to 3.93%. Okay, hitting lows that we haven't been at since July of this year. So we've given up all of the gains in the market. I think it's absolutely bananas. The unemployment report came out today. Unemployment is not increasing. In fact, there was a drop in the unemployment rate, which means bad news is good news is bad news. Well, the bad news is, or the good news is that unemployment is not rising. The bad news there is, what's the reason for the Fed to cut rates? Okay, so when you took a look at some of the things that happened today, and you look at the reports for this week, you look at CPI. CPI was a decent number this week. It wasn't raging. It's showing a little easing. You look at retail sales today. Retail sales strong. The economy is strong. So retail sales ran up today. Unemployment claims actually fell from the previous month. They were slightly ahead of forecast, okay, but they had fallen since last month. So you're looking at that. Yesterday, you had core PPI basically unchanged. So PPI did not drop at all. Crude oil inventories are actually falling. The day before, you had core CPI, which actually rose, okay, month over month. Now, and year over year, it's down, just a fraction, but month over month, CPI was up. I don't know what people are smoking right now, but there's no way that I'm seeing the Fed dropping rates soon. Unemployment is not rising, okay, which is, I think, a Fed mandate. They don't want to see unemployment this low. Unemployment has to go up. I don't see the pain in the economy. Okay, maybe inflation's easing slightly, and a lot of what they've done hasn't filtered into the market. I'm not saying they should raise rates. Okay, I'm just not seeing any reason to cut yet on this. If we take a look at TLT, just had a fantastic day. So this just continues to barrel upwards nonstop as bonds continue to rise. Taking a look at some of the futures, well, you had a really good day in the futures because the dollar is dropping. You know, the Aussie dollar, the British pound, the Canadian dollar, the euro, I mean, all having absolutely phenomenal days or a couple days this week. I do not have any trades on in these. I don't think I'm putting any trades on in these. Can they go higher? If the dollar keeps falling, yeah, you're going to see these Forex trades going higher. They're on a bullish run. There's nothing to do here. I'm not putting a strangle on in this market on these right now, at least not yet. But it may not be the worst thing in the world, but I want to see what the volatility looks like on these. Oil had a decent day today. So oil moved up decently. Great for us. We closed some trades. And if we look at this descending wedge here, we did bounce off the bottom of that wedge. We're actually getting close to the top. If we break to the upside, it's going to be pretty bullish, I think, for oil. I like where we are in oil. I have been bullish on oil. I have been selling naked puts on oil. We closed some winners today on oil. So it's been a good move for us. And then taking a look at gold, it's had a couple really snazzy up days in a row. And you can see MACD rising, RSI has been rising. The weekly's a little bit choppy sideways here, but this thing's been in a good trend. It did break the downtrend briefly for 2 days, back above it, moving. So gold continues to move. Bonds we've already covered. Silver also, after really a huge down week, silver's recovered half of those losses already this week. Taking a look at copper, it's on the move to the upside. I love copper, one of my favorite trades in here. I think a 112 trade in copper is definitely on the horizon for us. If we look at live cattle, kind of 2 neutral days in a row, but are we breaking this descending wedge? Now we broke it to the downside here. Are we breaking out either time or up through it? Either one works. Let's see if live cattle gets moving. If not, it'll pretty much invalidate this whole downtrend and wedge as we go. And then nat gas, it's a pretty interesting level down here. There really isn't a ton of support because we've broken it. There's not a lot under here that's where you can rest your hat on it. But I think nat gas gives us potentially a place to, are we oversold and starting to recover? The weekly is saying not yet, saying there could be some more downside to go. So I'll let the weekly give me a little bit of the dictation of where maybe we're going on nat gas. So I'm not trading that yet. All right. So if we take a look at the sectors today, semiconductors, once again, just out of control, over a double in the last 2 months. So semis have been the best trade, bar none. Regional banks, regional banks up another 5% today, gapping higher. You don't think this is frothy, huh? So regional banks jumping, just absolutely ripping to the upside here on regional banks. Oil gapping up on the session, up 3.5%. Energy up 3% today. I think energy is a really good opportunity trade in here. I think you can pick some energy names, Oxy and maybe some others, to get long or at least 112 trade energy here. Real estate doing well. Look at that gap up today. I mean, huge, well above the 3 ATR. But you don't think this is frothy, huh? You just want to get long. GDX, the gold miners. I've been positive on these. I missed getting in. It ran hard yesterday, gapped up more today. Not overly done yet, so I think there could be more upside on the gold mine. I think gold still has more to go. Let's look at the weak sectors today. Well, obviously you've got the consumer staples here pulling back. I don't know who's watching consumer staples really, but you got consumer staples. They didn't really extend this line out here, but it actually fits pretty well with this top and this top on consumer staples. This thing needs to be moved up a bit. So you do have this little wedge here. So it's a rising wedge. If we break below, could be some trouble for consumer staples. That was the biggest one down today. Utilities down today as well. This uptrend, though, is still in perfect tact. You can get rid of that downtrend channel. This thing has a series of higher highs, higher lows, and is definitely moving up. All right, XLV also down today. Healthcare pulling back a bit, and then tech stocks pulled back today. Okay, so we had a tech stock pullback. Okay, SPY was up though. Okay, yeah, SPY was up. The Qs were down. The big name techs are not performing well. And let's take a look at where we were. Apple was one of the 3 Magnificent 7 stocks up today, and it was only up 15 cents. So new all-time high on Apple. Beautiful. So it did set an intraday new all-time high on Apple. Great. That's fantastic. But it's only up 15 cents for the day. It's really bouncing around this overbought level, but it's not overbought technically yet. Microsoft, though, dropping over 2% today, breaking the 21 EMA. Microsoft not looking too good. It's in a squeeze and it's plunging to the downside here. Big down day today on Microsoft, dragging the market lower. You got Amazon breaking out and then failing to hold that as it's in a squeeze as well. Which way are they going to squeeze, up or down? You got Meta here dropping on the session. You got Google dropping on the session, even though it recovered off of its lows. NVIDIA up, but only 0.5% today. So NVIDIA's up. It looks decent. NVIDIA is one of, I still think one that looks decent. It's not overbought. MACD, RSI, both rising, breaking above the 21 EMA, right? Nowhere near overbought. I think NVIDIA actually looks interesting. Tesla, massive update today. So we talked about this wedge pattern that we're in. We broke yesterday, which could have signaled significant downside, and it reversed completely on today's session. In a squeeze, now breaking to the upside. I don't know which way this thing's going. I'm sticking away from it. I don't want to have anything to do right now with Tesla. And then Netflix dropping over 2% today, down 10%, erasing almost all of yesterday's gains. So when you look at the Magnificent 7, only 3 of them were up. Okay. Only 3 of them were up. Okay. You've got 4 of them that were down on the session. Actually, 5 down, 3 up. So not really the Magnificent 7, but if you're counting Netflix in there. All right, and I don't know if anyone counts Netflix as one of the Magnificent 7, but I throw it in there even though it's number 8. All right, so there's where you are overall in the markets. I think it's very frothy. Doesn't mean it won't go up. Doesn't mean it can't stay overbought. I just don't like it. It is not a great. I think your upside is absolutely limited. I think the risk reward to try to be bullish here is not great. At all-time highs, overbought, RSI overbought, over the 3 ATR, you're significantly overbought on everything that we're seeing, and the big cap techs are not continuing to move higher. They're selling off for the most part. Okay, so the big cap techs aren't going the same way as everything else right now. Frothiness. I'd be a little concerned. I think yesterday's move, absolutely ridiculous. I think if you think the Fed's going to be cutting anytime soon, I think you're wrong. I could be wrong. I'm okay if I am. Okay. It's just my opinion, not based in fact. Okay. I don't think anyone has the crystal ball out there. Maybe Tom Lee. I don't know. He seems to be right a lot lately. But if you're only bullish, you're going to be right more than anyone else. If you're bearish, you're going to be wrong more than anyone else. So why not just make bullish calls all of the time, and you're going to be right the majority of the time. All right, makes perfect sense to me. Let's take a look at our account today. So we did close the day with a minus 75 on our delta, perfectly delta neutral at 0.02%. I love the fact that we have slight negative delta and we're making money. So the account's increasing in value while we have negative delta due to having decent theta. Now our theta is dropping 923, but you got VIX at, is dead at 12 and change. So with low volatility, theta is hard to come by. We can't get enough theta in this account right now. But We closed out a handful of things today. We'll take a look at what that looks like overall. Now, our net lick did rise today, so we had a couple grand to the upside. Today we were up more, finished the day still up decently, but not as high as we were most of the day. BP usage dropped incredibly today. So we did take trades off, okay, which is definitely going to reduce the BP. So BP usage definitely dropping. Now, Tasty in the after hours giving me a bit of a different read. No, maybe not. Maybe not. I think it's right. Yeah, 183. So yeah, we're about right. In fact, it's showing me lower after hours. 56, 57% BP use minus the 10% that we're using for bill. Right now, we did double check. We got a nice $562 distribution a couple days ago on bills. So yeah, making $500 for nothing. Okay, $500 a month using 32,000 over 500. Okay, using $32,000 in margin is a 1.7% monthly return right now. Is that going to continue? Well, no, not if the rates are going to keep dropping like a rock, and not if the Fed starts to cut at some point. But for now, we're going to milk it as long as we can, and it pays for some nice stuff. So you're getting a free $500 a month on some of our cash balance using BIL. Okay, could be using treasuries, could be even making more. It's just not my thing. I don't need the aggravation and the work of buying individual treasuries. All right, but our BP technically is 47. Below the 50, we got room to add some things, and we did add a new trade today, and we're still low. All right, we did close out $2,008 worth of trades, and we closed a bunch of things today. So let's take a look at what we've closed overall here. So let's scroll up. We've had to make some changes to our account, and I just want to highlight the day's trade. So in this area, let's take a look. The first thing that we closed here was we had a put debit spread of a current oil 112 trade, and we closed that. The debit spread had cost us 25 cents to put it on to begin with. We closed it for a 50-cent credit today. So we actually made 100%. We doubled our money on that. So we put it on for 25. We took it off for 50, doubled our money on the put debit spread. So we closed it today for a $500 winner as we're starting to run away from the trap. So we'll take the profit on the put debit spread by itself. Okay, so great stuff there. Then we also had on one of our other trades, we had a strangle on oil. And normally we take things off at 50%. However, at 25%, I start to take a look. I assume that I'm going to close a strangle at 50% winner in roughly 30 days. That's my approximate target. However, I hit almost 25% in 7 days. All right, well, there's no sense in me hanging out to make another 25% when I've already made half of my expected profit in essentially 1/4 of the time. So we took the strangle off. That freed up some buying power, booked another $660 there on that in 7 days, 10% return on the margin used. All right, then we got into a couple of 0 DTE trades. We haven't done much of this this month, but I wanted to put it on today, and here's what I did. So the first thing we did was when we gapped up above the 3 ATR early, right around 10 o'clock, okay, I sold a call spread. So I sold a call credit spread, 55 cents. I only got 5 contracts on. I was going to use a half of a position to get in, and then I would double it if it started to go the other way. It never did, but we'll still take the winner. I got in at 55 cents. I closed it at a 20-cent move, which was a 63% winner on the session. So 1.2% return on my margin that I used, $175. Yeah, hey, it beats nothing. Then what I did was we entered one of these trades that Tom Sosnoff and Tony have been talking about, this at the money 0 DTE straddle using a 30 DTE strangle as your stop. All right, so I did put it on today at the open, and the straddle itself, put it on for $19.75, took it off for 14.45. I think they take things off around 25%, is what they were suggesting. So I took it off at a little over almost 27% winner. And it didn't take too long for me to get to that winner. When I put this trade on, it was 10:09. When I got out of this trade, it was 11:44. So about an hour and a half. So a nice gain in an hour and a half, made $530 on just one contract there. I did on the Strangle, I did lose 120. So all in all, this trade today netted me oops, you would think you could actually count $410. Okay, I'm so used to it. 400. I made $410 on this trade. Not bad. So overall, zero DTE today, booked $585 worth of zero DTE winners. Then what we did was we went and we closed our 1111, the original bear trap trade that we traded 4 some odd years ago. We've been trading some of these on down day moves. I don't trade them on up days and up strong rallies as much. But if we are moving slightly higher on down days, I'd like to put these on. Not when we're rocketing higher on irrational exuberance like we are now. So anyway, I put this trade on back on December 4th. I took it off today for a nearly 100% winner. All right, so we put it on here for a combined $1.15. We took it off today for 10 cents. Okay, so it was a 100% winner overall on the trade. We booked $262 on the trade, so pretty happy with that trade. $262. That was our max trap profit. Okay, that we had on the trade. Okay, remember we put this trade on for $1.15. Okay, and we did it using 5 contracts. Okay, which is in ES, which is a maximum of 287.50, and we closed today for 262.50. So almost 100%, 95% winner, roughly on this trade. So another good winner on the day. So overall, pretty good trading day. $208, got some zero DTE winners. We're down slightly in the month, and I realized we have some more stuff coming up. We'll see how those trades go. And if we get a little bit of a pullback, it's really going to help us with one of our ES Strangles that's at a 1x loss right now with no big deal. And oil's been doing really, really well. Gold, everything is moving properly. All right, so there's where we are overall. And then on the session today, I added another BA112 trade. So I did add a BA112. We put that on. We're going to treat this as a tiered BA112 trade. We entered it today. We're going to look to put up to 3 tiers on as the market moves. If it continues to move up, I'm going to continue to put more on. I'm sitting on right now, we have a BA112 is expiring tomorrow, just the PDS. I'm sitting on 2 FB112 trades. One of them is a tiered FB112. I'm also sitting on a hedge, and then I'm also sitting on a new BA112. So we got plenty of downside protection. Yes, it's using up buying power, but as you see, I've got plenty of buying power left to make some trades. So we'll get some more theta trades going tomorrow. But if this market pulls back at all, if we get a 5 to 10% pullback over the next month and a half time frame, we're going to be sitting really, really nicely now. So if we can get that 5 to 10% pullback, great. And then the market can go wherever. If we don't get it, we'll still keep making money with the 112 trades, which are doing fantastic right now. If you like this video, if it was helpful to you, as always, click the like button, friends. Help me out. Let's get the word out. Let's get some people. Let's get helping everybody here. If you're not a member of the YouTube channel here, subscribe so you get notifications. Posting stuff all the time. I don't know if you guys have had a chance to look at the videos from yesterday that Ed Kurtz and I did on fixed income. I recommend that you absolutely dive into that. It's a little more, specific to trading it as opposed to the info on it. But our members in our Discord, there is a boatload of info for you on fixed income trading. So trading ETFs and bill or treasury bills, as well as trading T-bills, T-notes, T-bonds themselves, how to use it, how to fit it to your account. All right. You guys have a great, safe evening. We'll see everybody in the markets tomorrow. It's Friday. Let's make some more money tomorrow and go out with the week on a winning note. Take care, everybody. Stay safe.